Americans have over $1.2 trillion in student loan debt, and your average dental student graduating today has over $240,000 in student loan debt, compared to your average college graduate with about $35,000 in student loan debt. So most of our new graduates have a lot of student loan debt, and here's what you need to know about how to manage that student loan debt. One, you want to know your loans. You want to know who the lender is, you want to know the balance, your monthly payment, your interest rate, and whether or not that interest rate is a fixed rate or a variable rate. You also want to know what your grace period is for the really new college graduates. Make sure because it could either be a 6 or a 9 month grace period. So the other thing you want to consider is what the best repayment strategy is for you. You can select the standard repayment strategy, which is paying your loan off over 10 years. You can do a graduated repayment strategy where you're still paying the loan off over 10 years, but your payments start low at first and then they get higher every couple years. You can also do an extended repayment strategy where you can pay your loan off over 25 years as opposed to 10 years. This is going to lower your monthly payments substantially, but it's also going to lead to increased interest cost over the life of the loan. Finally, there are some income-based repayment strategies that you can choose from, but it's important to know what your projected income is going to be in the future while you're paying these loans off. No matter what repayment strategy you use, I would be sure to elect automatic payments to ensure you're paying your loans on time, as that can lead to a reduction in interest rate on many student loans. Finally, I wanted to discuss some ways to pay your student loans off early. One way to do this would be to try to refinance your student loans with a private bank. There are a lot of private lenders in the marketplace now that can offer you a reduced interest rate and maybe lower your monthly payment. That can save you a lot of money on your student loans. Another way to pay off your student loan debt is to select a student loan with a lower balance and a higher interest rate and apply extra principal payments to that loan until it's fully paid off. Then take that amount of money, that monthly payment that you're making, and apply it to the next student loan and snowball your debt to have it paid off that way. So even though you may feel stressed out by the amount of student loan debt you have, by knowing your loan information, by selecting the right repayment strategy, and by implementing early payoff strategies, you can effectively manage your student loan debt as part of your comprehensive financial plan.